I'm here at Bloomberg Studios in San Francisco, about to go live on TV to talk about 3 trends in fintech. The first is what fintech looks like after the collapse of Silicon Valley Bank, now a little over a month ago. 2, the impact of AI on fintech, taking apart the hype from the reality. And 3, just what the general climate in early stage venture looks like right now. Should be a lot of fun. Also look forward to highlighting 3 of my portfolio companies that are doing work around embedded fintech.
From the heart of where innovation, money, and power collide, this is Bloomberg Technology.
Whether you're in fintech or not, AI is touching everything and anything right now. How's it impacting the world that you operate in?
Absolutely. AI is definitely a big trend going on in financial services right now. But I want to talk about kind of separating the hype and the reality.
Right.
I like to think about AI and financial services as a platform shift. So we are now, call it, 18 years into the transformation that cloud has had in technology more broadly. Cloud computing, AWS, 2005, they launched a simple storage solution, S3, their very first cloud platform. Financial services, very slow to adopt cloud technology, right? Last year, JP Morgan announced their very first cloud computing partnership with Thought Machine, a London-based company. So that is to say, we will see a lot of adoption of AI within financial services, but it may take some time.
We look at some of your portfolio companies, right? Some are consumer wallets, some are B2B lending platforms. What is it that AI is doing that changes their offering or the value proposition from your perspective?
Yeah, to put it simply, it lets them build better software more quickly with fewer resources. A lot like cloud did. With cloud computing, you didn't have to own the servers anymore. You could get a product into market more quickly. Now with AI, you can use very basic tools like GitHub's Copilot to write code more quickly. You can also use it to do process-heavy workflows, which for anyone who's closed a mortgage or done anything else in finance knows there are a lot of very heavy process flows within financial services, and having these new AI tools lets you write more code more quickly to do more things at lower cost.
Will it therefore be more democratizing from where these founders are coming from? Rex, where do you look? Is it purely US? Is it purely West Coast? Are you looking internationally?
So I focus on just the US, and I specialize particularly in B2B or business-to-business fintech, but fintech is very much a global phenomenon, and I think there is a tremendous amount of exciting opportunity for investors globally. As a solo GP, I tend to play towards my strengths, and I think the US also has a lot of opportunity remaining. We're one of the largest unified markets with a really rich venture capital ecosystem. The Bay Area in particular has an incredibly deep set of networks, and some of the best founders in the country, I think, tend to be out here, although I've backed founders everywhere. So fintech, very much a global phenomenon, but I am personally focused on backing the best US companies.
It's interesting, Rex, your model is basically taking checks from previous fintech founders, putting it into an overall fund to then go and seed new ideas. How much more jostling is there in the very early stage, the seed, the very early checks being written at the moment? Because people are more worried about writing larger checks in this economic environment.
That's right, Caroline. I do focus on the Preseed and Seed now. That's a stage that I'm very excited about because I've built out networks over decades. And you're right, we do have a bunch of founders who are investors or limited partners in the fund. My goal is to provide the founders I support with access from the best networks in fintech. So we have founders from places like Plaid, Betterment, SoFi, and other places. Sometimes they come along as angel investors in the deals I'm investing in. Often they end up being advisors or just episodically engaged to provide channel partnership, connectivity, et cetera. One of the cool things about the fintech ecosystem is just how integrated and networked it is. Because it's highly regulated, you often need to have partners who are doing various aspects of the complete solution you're building out. So having access to great founders is one of the key differentiators that I bring and then tends to benefit the portfolio companies. You had a question, too, about the extent to which it's competitive. So a lot of the multi-stage firms have pulled back a little bit from the pre-seed and seed. I tend to focus very early on, and I am intentionally a non-lead investor and try to be very collaborative with other funds that may lead pre-seed or seed rounds.
Rex, how much of a tailwind remains from SVB's collapse for fintech?
Yeah, so I think for certain growth stage fintech companies, especially business banks, it's been a huge tailwind. If you look at deposit inflows to companies like Roe and Mercury alone saw about $2 billion of deposit inflows just a few weeks after the collapse of SVB. For those of you who aren't familiar with SVB or their business banking footprint, they had about an 80% market share of tech-enabled or tech startups. Now they've pulled out Mercury, which has about 100,000 customers. Most of their companies are also in the tech ecosystem, although they also support e-commerce to other places. Now the biggest incumbent is out, and Mercury, therefore, is a great place for founders to go to get access to great business banking services.